Hello and welcome. You're watching Business Plus. Indian markets kicked off the week on a weak note with both benchmark ending today's session in red. Joining me is Suyash in the studio. With us is also Amit Kumar, who is from Fintrekk Capital. But before I go to Amit, I want to quickly go to you, Suyash. Talk to us how the markets performed today.
So after a 1% fall, Indian markets extended the losing streak to 2 consecutive sessions today. Now we saw some profit booking in heavyweight stocks after they missed earnings estimates of the street. At close, Sensex was down about 300 points at 66,384 levels. It touched an intraday high of 66,808 levels and an intraday low of 66,326 levels. Now Nifty on the other hand ended 0.37% lower at 19,672 levels. The 50 share index touched an intraday high of 19,782 and an intraday low of 19,658. The broader market, Shweta, was mixed today. Nifty mid-cap ended with moderate losses, while mid-cap index continued its winning streak with 0.37% gains.
And what are the stocks and sectors that you were tracking this afternoon?
So Shweta, most sectors barring the auto, some PSU bank stocks and pharma stocks closed in the red today. The FMCG index was a top loser today. It shed about 2%. Oil and gas and metal also fell about 0.5%. Now the Nifty Pharma index was a top gainer in the NSE sectoral indices. It was up 0.4%, followed by 0.17% gains in Nifty Auto and 0.1% gains in Nifty PSU banks. Now among individual stocks, REC was a top gainer today. It rose about 6.86%, followed by Canfin Homes, which was up about 6.24%. Power Finance, which was up about 5.62%. Now, on the other side, United Spirits was a top loser. It fell about 6%, followed by Biocon, which was down about 5.87%. IGL, which was down 4.8%, and ITC, which was down 3.89%.
All right. Let's quickly go to Amit, who's joining us this afternoon. Amit, good afternoon to you. I want to begin by asking the BSE PSU and CPSE, which is essentially your Central Public Sector Enterprises Index, hit a lifetime high today. Both indices have, in fact, significantly outperformed Sensex on a year-to-date basis. What is the driving interest here?
Hi, thanks for having me, Shweta. So I think if we go back close to 18 months ago, these stocks and as a sector were available at very cheap valuation. The issue in these stocks has always been whether the government will be shareholder friendly or not, whether they'll get the payments on the orders or not. And we have seen at least three to four sectors, railways, whether it is defense sector. We have seen the payments coming in, and that has been a very cushion to the investment horizon if one wants to hold these stocks for a longer time. So this kind of pattern which we have seen in the PSU stocks, mostly large caps, and looking at the valuation they've had over the last 18 to 24 months, I think these were, very, very good bets to have in the portfolios because all of them have dividend yields of 7-8%, even 10% in some cases. So I think, instead of going into the highly valued, high P multiple companies in the markets, these were, better bets. Obviously, because they underperformed for such a long period, post 2015 onwards, that these were under-owned, under-researched. Nobody, really have the portfolios in the PMS and the AIF space. Even in the mutual fund space, the ownership was very low. So what we have seen over the past 18 months or so is that these stocks have been coming from a very low PE multiples. The interest to buy them has gone up. Obviously, the businesses have also done well. The payments have come from the government side. And remember, we are in a election cycle. So a lot of capex is being done by the government also in these PSU companies. And as a result, we are seeing a strong reaction on the Dalal Street.
Okay, strong reaction on Dalal Street, specifically with respect to PSU stocks. In fact, another interesting story that we're tracking with respect to PSU stocks is that of Hindustan Aeronautics, or HAL, share prices that gained on the back of movement in HAL prices, and the fact that they have in fact acquired a deal with Argentina, the announcement that came by the way of that deal. We've seen not just HAL stocks, we've seen PSU stocks gaining quarter on quarter. There seems to be some sort of renewed focus, attention towards these PSU stocks. I want to specifically understand with respect to defense and manufacturing stocks and that of HAL, which has given a 300% profit in its stock price year to date in last 5 years. As a matter of fact, what is driving this momentum in HAL share prices?
Right. So, I mean, obviously they have got defense orders in the last 2 years or so. And remember, government came up with this list of defense instruments which will be made exclusively in India, and they banned all the imports from outside. And in fact, now our defense companies can actually export also, even though currently that opportunity is very small. But the hope is that with this PLI scheme and Make in India initiative, we are going to see much more exports happening. So all these companies, I don't want to get into the specific names of whether HAL, because we own a few of them in our strategies, defense stocks. All of them have got good orders over the last 2 years, and their order books have really swelled. Sometimes even 5x of what it was 2 years ago. And as a result, we have seen the action. And the most important thing, which I have talked earlier also, nobody was really owning the defense stocks because they were not doing anything since 2008 global financial crisis. There was a period from 2003 to 2007 when the stocks like BEL, PFCs, RECs, and a lot of these companies in the defense space did well, but nothing for more than a decade. So nobody was really owning them. And when the PLI schemes were launched, when these lists came out banning the imports from outside for the defense equipments, then priority all obviously went to these sectors. So I think it was a decadal change in the theme of defense stocks, which happened. Still, I think not a lot of people on the street is convinced that these are sustainable themes. But as we have seen, those who have believed have made good money in these stocks. And I think it's a 3-year, 5-year theme going forward also, because the export opportunity in defense is quite large.
Amit, you just mentioned that the returns in the defense space and also the public sector undertaking stocks may not be sustainable, but I mean the BSE CPSE index has rallied about 19% year to date. The PSU BSE PSU index is up about 13%. So in the very short term, can we expect some sort of profit booking, or are there some driving factors for these stocks?
So I think a short-term profit booking, nobody can really predict. Obviously, none of these stocks I would be buying fresh, as a fresh position. I may continue to hold them. In fact, as a disclosure, we have actually booked some profits earlier in this month in the 3 defense companies which we hold in our strategies. So I think taking some profit off the table, given the sharp run they had over the last 18 months or so, I think that makes sense from a strategy point of view. But having said that, I think the runway is quite large if one takes a 3 to 5 year view. The only concern here is the working capital getting stretched for companies if the government payments doesn't come. And remember, this is an election year, so we could have some delays in getting the payments from the government, and that is my concern. And moreover, if the government changes next year, then that is a different analytical game which we have to play, and to see how much is the impact of any of these companies, on the payments which we are going to get from the government. So I think I'll be cautious about the working capitals of all these defense companies going forward. But otherwise, if that issue doesn't occur, then we have a sort of a slate for almost 3 to 5 years next.
Okay, interesting. You'll be cautious about specifically about defense stocks, and I want to talk about HAL here. As we initially discussed, it had a very strong increase in stock prices, about 394% in 5 years' time, Suyash, which essentially means what? If I held about 1,000 rupees worth shares of HAL about
By
5 years
times.
ago, I would have them at 4,000 rupees today.
Definitely.
That is
a
profit,
significant run
a
up.
significant run up. Absolutely.
And we have seen that from the government, like the focus on indigenous manufacturing of products. And as Amit just mentioned, like certain defense equipments can be only procured from the local manufacturing unit. So there is clearly a push from the government, and we have seen in the strong order book of HAL.
All right. And in fact, public sector stocks have been investors' favorite for their ability to pay up consistent dividends over a long period of time. The shares of public sector banks have outperformed the market, continue to be a focus of this afternoon. Amit, I want to understand from you, and we're not just specifically talking about HAL, and I understand why you're cautious there, but as far as Steel Authority of India is concerned, ONGC, NMDC, all these stocks, if you look at them, consistently have paid up a higher dividend, and IOCL included.
Yes, I think dividend has not been an issue in these companies ever. They pay a very handsome dividend, 7 to 10% to the shareholders and also to the government. Remember, every year, all these PSU companies have to pay a certain dividend to the government, given that they are the largest shareholders in the company. So I think dividend is never been the issue. It has always been the case where the street has never been convinced about the sustainability of a lot of these businesses. Also, in between 2015 and 2018, 19, I would say they had this schemes of OFS going on via CPSE ETF, and that sort of created a selling overhang on all the PSU stocks, because you had all the major PSU stocks in that ETF, and government was coming every 3-4 months to actually sell this ETF in the market. So you had NTPC, you have SJVN, you have all these oil marketing companies who were part of these ETFs. So that sort of created a selling overhang. And for almost 2 to 3 years, their stocks actually did nothing, even though the fundamentals in some of these companies were in place, even though they were very cheap valuation wise. Some of them were trading like less than one book value. So I think that once government decided post 2019 that they are not going to sell any stake to the CPSE ETF, and they are going to only do selective OFS, I think that selling overhang, went away. And then after COVID happened and these stocks were available very cheap and the market has gone up a lot. So there was very few opportunities where the low valuation stocks were available. So at that point of time, PSUs became a favorite for the street, given the dividend yield, as we have talked about, given the fact that these were very, very cheap, given the fact that they were under-owned and under-researched. All these technical parameters sort of added to the business of these companies, and that's why we are seeing such a huge rally.
Amit, another sector that has been actually in focus over the past few weeks and has been a major contributor for the recent rally has been the Nifty PSU Bank Index, and we have seen the PSU Bank, at least as far as the earnings season goes, their NPAs have come down, the profits are great. So
profits looking good.
Profits are looking good. As I mean, Canara Bank came out with a 75% year-on-year jump in profit. IDBI had a great earning report as well. So the PSU Bank Index has been in focus lately. Do you expect the rally to continue moving forward, or can we expect some profit booking there?
So Suyash, I think due to high interest regime in the past 1 year or so, for the last 4-5 quarters, I would say, all the Indian banks and just not PSU banks, they have all managed to report improvement in their margins. As the PSU banks again were trading at very low P, which sort of made them very attractive. The one key thing which happened was that the balance sheets got cleaned up. And the deleveraging of the corporates, which was happening, that happened at a very record pace. Now, because the asset quality issues were removed, and again these were trading at very low PE. Again, they became a favorite for a lot of these fund managers and a lot of analysts like us. No, so I expect yeah, that PSU banks will continue to deliver better numbers on both quarter-on-quarter basis and year-on-year basis. I think as compared to probably some of the fancy and a little expensive private banks, I would still prefer PSU banks. But I would still would stay in top three, four PSU banks only as a risk conservative investors. So
So
all of
Amit,
them
what
are,
are those
I
three,
think,
four
can.
names which you are
So,
bullish on?
the top three, four, SBI, BOB, Canara, Union, I would like to, say into them. I think SBI is probably the safest bet for the long-term investors. But for the medium-term and short-term investors, they can look beyond SBI as well.
All right. So those, of course, are some of the big bets for specifically Amit. We will, of course, keep tracking all those updates. Amit, appreciate you taking time out and joining us this afternoon. Thanks very much, Suyash, for all those details.